What is up, everybody? Logan here again, joined by Halcyon today. And we're going to talk about a couple things in this video, actually. We haven't had Halcyon on in probably a month, I would say. It was the last time we recorded something. And we're going to go over a couple questions I've gotten in the Discord lately on, like, what does it take to become a full-time stock trader? We can also dive into options, but I think it's good to start with stock trading because it's a little bit more simpler to grasp. And then we'll talk about options a little bit later too. And then Halcyon's going to go over a couple of his charts that he has laid out in front of us, how he uses them, and then for like longer term and also shorter term perspectives too, how he uses those. And then we can chat about his butterflies lately and why he hasn't been playing calendars as much. So I do appreciate you coming back on, my man, and excited to see what you got in store for us.
No problem. Sorry, I was literally unscrewing the top of my water bottle in the middle of your opening line there. Sorry about that. Yeah, so it's a good question. I think I've had definitely multiple people ask me about that over the last couple of years in particular. It's a pretty common question because when you get the feel and the taste and a little bit of that kind of drive that comes with what's possible with being a professional trader or a full-time trader, there's not many professions, if any, that really are even like it. And I say in some ways it's like the ultimate battle with yourself is being a professional or a full-time trader. We'll talk about it through the context of the kind of what I think are some of the minimums you have to have in order to really give this thing a go, and then talk a lot about some of the mistakes or a lot of the main mistakes we see newer traders or those who are trying to make it happen do and repeat over and over again, that are going to make it really difficult, like swimming upstream, just a lot more difficult than it needs to be. So, to start, I think most people have heard the statistics on this. I think they're skewed a little bit personally, but that about somewhere between 90 and 95% of people who trade or try to trade for a living don't actually make it. I personally think that's a little bit screwy because stats can always be manipulated in ways to prove points that you want them to prove. But there is definitely it's a high percentage of folks who aren't, who start the trading world and then aren't trading 5 years later. That's for sure. Mm-hmm. And I think a big part of the issue is a lot of people come into this focusing in on the wrong aspects of trading. They focus in on how much can I make, and they don't look so much at how much can I lose, which is, I would argue, probably more important than anything else you do is understanding your risk and understanding how to manage risk when you are in trades. That particular factor, if you don't pay attention to that and you only look at how much can I get from this trade, that'll eventually crush you at some point. And psychologically, it's an absolute, trading in general is a psychological battle nonstop. Everybody who's ever entered a trade before knows that feeling or has experienced that feeling before of, the high of getting in the trade and seeing it work in your favor right away. And then the utter lows of when it goes against you, and the feeling of like there's nothing you can do, or the market is like on purpose attacking you. And it's a miserable feeling. And I will say emotionally, I've personally done literally every mistake you could ever think of in my career of getting into trading. And I've been doing it for a long time now at this point, but I've made every mistake you could possibly think of, from the dumb newbie mistakes all the way up to things that I should know better about what I'm doing at this point. So, it's not like you're immune to it, because it is a battle with know thyself forever. No matter, it's never a time where that isn't something that you should be really close to paying attention to. So let's talk about the psychology side first, and then we'll move more into some of the mechanics of understanding your system, how to measure your system, management of the position in particular. Such a huge and underrated factor is managing your positions correctly. And we're viewing this through the lens of stocks, not so much of the option side, because that's a very, very different animal. And that probably be a video for a second video to do is professional option trading, the difference between the two of stocks and options. This will be like 3 hours long if we talk just about the option side of things, or add that into it. But so from a psychological perspective, it cannot be understated that that component, probably more than anything else, is what makes or breaks traders, is those who are able to control their emotions and those who can't. And most don't ever think about that. They don't actually ever look into, what am I feeling like in the midst of this trade? Why did I get into this trade? I guarantee almost everybody who's listening to this, at some point, if you've done any kind of trading, there has been a time where you have entered a trade only because you had a feeling that you should get into it, and not because there was any actual price action points or true setups that were moving the probabilities in your favor to have a profitable trade. So psychologically, that is a huge component that I think, as you look at, is this something I can do long term? You have to find the right niche for yourself as to how you manage and handle the psychological side of it. Some people, they have no qualms with dealing with the super short term, all day trade style of trading. That personally does not work for my own psychological and emotional well-being. I personally can't stand the whipsawing of what's going on with that. So I tend to steer away from that. And I've over time learned where my sweet spot is, where I don't even think about what's going on in the trades. I don't even think about if they're winning or losing. I just know this is the time frames that work for me. And this is the place that I'm comfortable with, understanding my risk, how much risk I should put into each position that I'm looking at doing. And what if something goes against me, I already have a predefined plan for, what I should be doing with it. And it's trading is all about preparation. You just have to understand, when you get into a position, you need to know every outcome that you're looking for. What is my stop loss side of things? How do I even set my stop loss? What are my parameters for, what am I looking for on the upside? Do I have a target that I have in mind? It's because, again, it's all of those are factors that you should have taken some time ahead of time to think through. Because when you're in a trade, it's like your brain goes idiotic sometimes when you get into trades, and it's like you can justify the dumbest things that make no sense to justify when you get into a trade. And honestly, it's an addictive thing to always feel like you need to have a trade on. I know that people who trade regularly or who are into this, if you look at some of your own personal trades and really dive into what you've been doing and why you've been doing it, there's going to be a component that is, I just like having trades on. And so I just put something on, even if it's not the best setup. So from a psychological perspective, again, talking about that component, is it cannot be stated enough. You got to understand that your emotions are going to betray you most of the time when you're trading. So the best thing you can possibly do is figure out a system that works for yourself, that gets the emotions as much as possible out of the way. And in fact, I cannot think of many times ever in the history of all the trades I've done that the emotions of the gut feeling of something has ever helped me or served me in a way that's, that was 20% more because my gut was going up further. Most of the time, it shakes me out of a position early, or I take profits, too soon, or I raise my stop loss because I'm feeling, watching it crater down 3% in the first 10 minutes of the day. And by the way, which is just a no-no, don't even waste your time looking at the first 15 minutes of the day. I would say maybe the first 30 minutes of the day, don't even waste your time looking at it. It's so massively manipulated with price action. But so that's a big thing. Know yourself, understand that the trading style you're using, does that fit your temperament? Is that going to give you the best edge? Because what we're doing is all about probabilities. That's all we do, is we look at probabilities and we see, can we make them work in our favor? Similar to doing, blackjack at the casinos, is there's a high game of probability, and trading is the same kind of deal. It's just a game of probability that you put as many things in your favor to see if you can get the outcome you're looking for. So that's, from a psychology side, that's how I typically look at that. And that's an individual thing for everybody. Some people are geared towards the super high risk side of things and love the fast action part of it. I personally don't like that at all. And it tends to just screw me over in terms of when I try to, I've definitely done all kinds of stuff in that end of the spectrum. And I'm not consistent is my biggest thing. And no question, consistency is easily the number one thing when it comes to every aspect of what you do with trading. If you could put that word on your on your screen to remind yourself over and over again, consistency is either the slow and silent dream stealer if you aren't consistent, or it is the catalyst that continues to make the dreams happen. And that is to no matter what you're doing in life, but in trading in particular, that will define you or it'll absolutely wreck you if you cannot get it under control. So let's take a look at the thought process around, for example, like a trade here with Ford. So when we talk about consistency, for me, I have a consistent pattern when we are in bull markets that I look for and try to repeat over and over and over again when we're on the stock side of things. So for me, that breaks down into basically three components. First one is I'm always looking at what is the trend. And for me, I use, this is the weekly charts on my far right, daily in the middle, and the hourly, 90-day hourly on the left. If you've seen any other videos of mine, I've done on some of the option stuff. These look familiar. These are a little bit longer time frames because for me, I'm more of a swing trader by nature when I'm doing anything with stocks. So I'm looking at more like that, anywhere from 2 weeks to kind of 8 weeks or longer type of trade. I'm definitely not an investor in terms of the idea of I'm going to buy a stock and hold on to it for 15, 20 years. That's not usually my style. I will go in and out of it multiple times throughout that period. So, but first and foremost is I want to use, we'll just zoom into this one first. So I want to use the weekly as my primary trend to understand which direction I'm going. So basically, which way is the broad river flowing? And in this case, I like to use the MACD and the RSI to help me understand which way are we flowing. So in this case, whenever MACD is positive, that just tells me, generally speaking, trend is up. And so I should be looking for more bullish positions. And then when RSI is again green here, which just means it's above 50 for me, that means trend is up and continue to look for bullish setups. So that's both, basically what I'm using weekly for 9 out of 10 times. And it works the same way when you're looking on the negative side of things. Whenever it's RSI is negative and MACD is negative, that means that the trend is either sideways or down for me. And I'm going to avoid taking long positions because why do I want to get into a position that does not have momentum in its favor, right? I want as many of the probabilities to work out for me. So like down here in 2020, right? This is May of 2020, Ford switches back to positive momentum. And now I'd be looking for setups all along this rising trend. This whole mess right here, back and forth, there's no trades for me during this time because there's nothing clear in my opinion. And then here is the next recent time. So October of this past year, trend continues to be up. Ford has been an absolute rock star. It's been impressive what they're up to. But anyway, so then I go over how I actually do my triggers. Then as I look at the daily, right, and I'm looking for two main things on the daily. Number one is do I have a squeeze? Is there some squeeze somewhere building up that is from and knowing that my trend is up, then I'm looking for bullish setup squeezes, which this is definitely one right here, which would tell me at the end of December was get in and buy shares of Ford. Okay. RSI is still positive. Great. One of the best things you can do if you can get these to line up, which doesn't happen often, but every once in a while, this does happen with stocks where you'll have your MACD go positive at the same time you're in a bullish squeeze at the same time the RSI is going from negative positive. That is a very, very high probability trade that you're going to see upward price momentum. How much? I have no idea, but you're definitely going to see the upward bias there. The final thing that I use, and this is more for a frame of reference with stocks, a little different for trading options, but on the stock side of things, you see all the different lines on here. That's just standard deviation. Just give me an understanding of mathematically, where can I expect within this time frame I'm looking at this stock price to be able to move around to. So a 2.5 standard deviation is these tops and bottom, so the green and red. Again, when a single 2 standard deviation means that you've encapsulated 97% of the move. So I know that if I get a stock that's up into this range, that I'm not typically looking for a ton more upside here. And if anything, I'm looking at using it as an opportunity to exit positions. Okay, which comes to the next main point, right? So let's just review quick. On my setup, we're looking at Are we in weekly trend up? Okay, if the weekly trend is pointing up, then I can do bullish setups. If it's doing down, then I can look at more bearish setups. Okay, that's step one. Always be consistent. Don't ever trade it opposite. So, for example, if you're looking for bullish setups while you have a falling MACD, that's just your odds are not in your favor for that. Wait until it flips around. It will give you the opportunity. Then we look at, are we having squeezes on here, which the Ford tends to give us pretty regular squeezes. And this is the TTM squeeze. It's free on Toss. I think it's free on Tasty Trade, and I'm pretty sure it's free on TradeStation too. Actually, no, TradeStation, everything costs money there, so it's probably not free on that one. And I don't think Interactive Brokerage has it either, unfortunately. So anyway, this is, then I look for these and I just buy, as we start seeing the light blue bars build up, that's where I'm looking at accumulating shares. So that's how the buy points work. The sell points work sort of the opposite of this. So I use the MACD as my trigger for selling. Okay, so once MACD, so if I get in a position here, like we entered in the end of December for Ford, once Ford is doing its deal here, which all this is still positive, as soon as this MACD crosses negative, then I'm looking at utilizing that as a means for exiting the position. That to me tells me the momentum has run out. Does that necessarily mean that it all completely runs out? No, doesn't always. Sometimes it changes completely different than that. For example, here's the last major one. Well, here's one here, right? So if you had bought in the long sometime in here actually your long last one was here, right? You bought this in here, you're in and you're just waiting. You just got to sit on your hands until you get a crossover. Because right, my goal on these is to collect trend. I'm not trying to time perfectly tops and bottoms. I don't care if I miss the top 10% or the bottom 10%. I just want to collect that middle, 75 to 80 if I can, which, that's a good living if you can keep doing that over and over and over again. So then what would happen is once, zoom in a little bit on this, punch in the face when you do it this way. So once you zoom in on this, you can see my cross happened on November 18 or 19. I think it was November 18 actually. So then I would look at this and say, okay, I'm going to set my stop loss at whatever the low of this candle was. So I typically do for these, if we're using the MACD for this. And then if we happen to open lower tomorrow and take that out, then I'm out. And I will collect all the profits that I got from, would have been entering around $13 and got out around $19. I mean, not a bad deal for, a month and a half of trading there. And so that's, and I'm just consistent with that every time. It's no thought process. I don't want to emotionally get tied into it and say, oh, well, Ford's going to have this new thing come out and this news and XYZ, whatever. Nope. I'm just looking purely at price action and trying to find something I can repeat over, and the market closed, over and over and over again. That's what I'm looking for. I need to have something I can repeat. It cannot be something that is my emotions are telling me when to do something or not. The other thing that's really, really helpful to understand, which is also not talked very often about, is understanding how much to put into a position, one, and two, how to start adjusting that up or down based on the success you're having with the strategy you're using. Okay, so but in order to be able to do that correctly, you need to document what your trading strategy does. You need to document how often you win, how often you lose in any given year, so that you can mathematically calculate out this is the amount that you should be putting into your current trades per trade that you're using. And this is roughly what you should be looking at from a stop loss perspective. That gives you a whole wealth of information. And I'm pretty sure there's a couple of videos on YouTube about this, but it's called the Kelly criterion. And I would definitely dig that up and look at that. You'll see some information about how to calculate out the way the odds work with how much you want to have on the table at any given time and exposed to any particular trade. And so for me, those are the big components. Psychologically, I don't want to have a method or a system that relies on my emotions. The second piece is I need to have a repeatable pattern. So in this case, we're talking about the bullish side of this, right? I need repeatable patterns. And for me, it's always look at the weekly for the trend and the daily to help me set up the entry points. And then finally, I need to have a way that I manage my trade. And for me, using the MACD, as long as it's staying positive, I'm just going to sit in that trade and I don't care what else is coming out of there. That gets my emotions out of the way of trying to, not have a single day where it's, oh man, it might be closed negative, I need to get out of this thing kind of deal. and not worry about the, well, I'm giving back a little bit of profits as this thing is figuring itself out. So, I mean, that's for me, probably the biggest point that I can pass along is, you have to do the work. Like, trading full time is not easy at all. And it is for those who don't prepare, who don't take the time to work out the math on their system, work out what the system's going to be, why they buy something, why they sell something, what their signals are, what kind of sizing and position sizing to do. If you don't work that stuff out, you are destined to have major problems, or you won't be doing this down, long term. I don't know any traders who do this for full time that don't know that information prior to going in. And it would be you would save yourself so much time and grief. You would take some time to, document out every trade that you made in the last year and see, okay, what was the reason I took this trade? What was behind this? 2, what was my reason I sold this trade? And 3, did I have a predefined getting into this, why I was going to sell or why I was going to buy more along the way? And if you don't have any of that information decided, what will happen is at some point when you're under fire, you're just going to make a dumb choice. What will happen? I guarantee it. You will make some kind of stupid choice in the middle of the process, and you will be shooken out of a position early, or you'll sell when you don't need to sell, and it will be because you didn't come in prepared. And that's the hard reality of trading is, if you're not prepared, the market will take your money, is what will end up happening. And I don't know about you, but I'm in the business of making money in this and not giving it away. So yeah, man. And that's kind of that's the main deal when I do stocks. This is basically what I look for, rinse and repeat over and over again. If you want to drill more macro on this, I tend to start, I'll look at all of the major sector themes via ETFs and see where is the strength. There's a couple of really good tools to utilize. One of my favorite ones is called etfscreen.com, and they will, basically what they'll do is do a relative strength measure for all of the exchange traded funds you want to look at, and tell you which ones at any given time are top of the top dog essentially. And those are the ones you're going to want to pay attention to, because that's where all the momentum is. Something in motion tends to stay in motion. And the same thing is true when price action is going up. It tends to stay going up unless some other outside force, blast down, like a terrible earnings report or, a black swan type event that is something that you can't predict coming through. And then once I figure out where that, what sectors are moving, then I try to isolate and focus in on the stocks inside of those sectors that tend to lead it. And that's how I narrow down what I want to buy, or look at shorting. So
awesome. And
questions?
Another thing I wanted to throw out there too, because you and I both trade full time. I would say what makes me more confident though, is that I have, and I know you're going to agree with, I assume you'd agree with me here, but where it's I have YouTube ad revenue to fall back on if my performance hinders. I have other businesses like a CBD company, and I also manage other investor accounts too. So you're looking at buying a business at one point as well. And I think that is also what makes being a full-time trader easier, is a lot of investors or people who trade, they have real estate in the background. I would probably say 90% of people who are full-time traders don't just trade. I think they're just hustlers at heart. And if they're not a hustler, then I would say that they have just smaller goals for their passive income, and that it's not the only thing they do. I truly think that. I just think because of how much of a mental game trading is, that a lot of people who do trade full time have other things going on outside of just staring at the charts and trying to get the price action correct, or swing trading shares for a couple months. I think that takes the pressure off too, right? To where if you do lose, I don't know, let's say you have a rental property that brings in $1,200 a month, and you take a trade and you lose $2,000, you're not stressing out over it because you have other things going on. Whereas I could see some people who maybe they have $100,000 account, they want to become a full-time trader, and that's it. And let's say you take a 30% drawdown, you're going to be discouraged, and then relying on just the market for all of your income is going to be very difficult, I think, from that point, digging yourself out of the hole. But that's just kind of my perspective. I just want to see what you think about that and your thoughts on that.
Yeah, I think if you were to make the characteristics of or common traits that you find with successful individuals in the markets, whether they're traders or investors, otherwise, I would argue that they tend to be entrepreneurial focused. There's an element of independence with it. And there's definitely a competitive fire that's kind of under the surface, because when you get down to it, it is you versus the market. I mean, that is what it is. Now you can come prepared to that fight, or you can come just emotionally a hot mess, and then have your accounts slowly, bleed you out with 1,000 cuts by making dumb trade after dumb trade. But yeah, I mean, I would agree with that. Like, the market, shows you the power of compound, earnings and interest and returns. And it's a magical force that, can create incredible amounts of wealth and give you the opportunity to do all kinds of, incredible things in your community and with your family and, people that are around you. And that's a ambitious and noble thing to view it as. Those who view it as, how much can I just accumulate, like that why that they're doing it doesn't have staying power, in my opinion. That people who are just, how much can I get, is that's the wrong attitude going into it. And I guess a lot of things in life in general is, if you don't have a very good why for doing something, you tend to not do it very long. Whether that's I want to get in better shape or whatever. Like, if your reason for it is just, I want to feel healthier. Like, a lot of people, that's not enough of a reason to make that happen. And I think in trading, it's pretty similar. But yeah, I would agree, man. Entrepreneurial, that's definitely at the core trait, of a competitive fire to beat the market, and to really, go against your peers. Because in a lot of ways, the market is a zero-sum game. It's not like it's, for every time you're selling something, somebody else is on the other end buying it from you, and they have a different opinion than you do. And so like I said, when it comes back to it, is everything we do is to give us an edge, to move the probabilities in our favor. And that's not just the tangible, what trading platform I'm using and which, set of indicators do I like? And, that's also how you prepare yourself leading into sitting down for the day. Like, how well did you sleep? Are you taking care of yourself outside of market time? Because again, you sleep poorly and try to trade or do anything that's a cognitive, expense, which I'm going to argue trading is cognitively really difficult and taxing. You're going to be behind the 8 ball on that for sure. You're behind the curve, because I don't know about you, but trying to do hard stuff after crappy sleep is it's not a good recipe. And so you got to look at, trading is a lifestyle. It is, and I mean that from the sense of, if you want to do it well, that's looking at all areas of your life. Am I eating well? Am I working out? Am I sleeping well, so that I can be prepared to make sound choices the next day? All those compound on each other over time. It's just what it is. Every little choice you make and what you do over time, all that slowly builds up. It does. And then you look back, and 3 years later, you are what you are. And, you hope that you've continued to evolve as a person and evolve as a market trader, and you've learned some new things, and you've shed off some bad habits, right? I think I've heard it said that 95% of what we do day in and day out are completely unconscious, habits that we just allowed to form, whether we've created those habits on purpose or they just organically happened. Probably a lot of them are not very good habits either, is my guess. But yeah, and again, trading, you especially when you're first getting into it, you got to be super intentional with creating the right set of habits that are going to give you the best odds of winning. Again, and those come down to psychologically understanding where you are with things, taking a really look inward at yourself and figuring out what makes you tick. And it's going to be then defining ahead of time, what is your system? And if you're not willing to do that, you are going to do what most traders do, which is the dating game of indicators and the dating game of strategies, where they every couple of weeks, they're trying out a new strategy and a new couple indicators. The moment they get some friction or some issues with them, they step off and try the next one, and they never give themselves nor that strategy time to work itself out. Right. So it's just how it goes of this, and talk about the option side of it. Because I think options, it's a lot of principles are the exact same, but options present a whole nother set of variables to consider. And that's a good time for a separate video to talk about those as well.
That'd be perfect. Cool. Well, is that everything you want to touch on today? I think I have everything.
Yeah, I think that's a good start. I mean, hopefully you have some folks who have some questions about just how some of those pieces come into place. But yeah, like I said, those are you've got to define ahead of time what your success is going to look like. And the only way you can do that is by taking time to look into each one of those components. What is my strategy? What indicators am I going to use? What is my reasons for buying? What are my reasons for selling? How am I to manage positions? And again, if you don't do that, you're just, the success you do have is going to be minimal. It'll be, probably a tenth of what it should be or what it could be.
Yeah, no, I agree, man. That's the one thing like that I've experienced lately too, is just the market's been put me through the ringer with a couple positions, and I've been trying to stay as non-biased on the direction that I picked initially, and like I could flip at any moment, like flip the position, not me flip at any moment, but me flip the position at any moment. But it's also just keeping that neutral viewpoint and just making sure that like sometimes you just get bad beats, right? I mean, you could be a day away from expiration day and you're out of the money, and then boom, you're in the money at the end of the day and you sold that credit spread or something. And sometimes you just get a bad beat like that. Where then, Monday, that happened to a lot of people, I would say this week, where we opened up, fell all the way to 45.80 and then rocketed to 47.50 from there. And a lot of people were buying puts at 45.80, 4,600. And, that's just another example of just being the wrong side of the trade right away, and how you get out of it depending on what you did.
Yeah, I completely agree. It's
wild.
There's no doubt you're going to have bad beats. There's no question. That is a part of trading. In fact, you should expect in terms of if you can get a win rate of around 60 to 70%, that's doing pretty damn well, because that also means that you're managing your losses carefully, and that you let your winners go. So, yeah, man, it's that is a part of it. You go through spells of time, which usually happens almost always after your most successful periods of time. Almost always the worst periods of trading happen shortly after that. It's funny how that works out, but that is what I've experienced over my career, and I think you're experiencing that currently.
Oh yeah, absolutely. From September was my best, August was my best month, and then September ended up being my worst month of performance. And even today, I mean, there's a couple times like Roku is putting me through the ringer, and Amazon, right? That's another one. So in my SPX trades, like we rolled one today when it was 4,700. We rolled it to next Wednesday, and it would be in the money at the end of the day today because we sold off 1% since I rolled it at 2 p.m. and we closed at 4 p.m. at 46.60. So I was like, well, good thing we rolled that, brought the strikes down, because if we didn't, it would have expired tomorrow and we could be in the, and it just is like, that's a bad beat.
That is an incredibly crappy luck, no doubt.
It's just how it goes sometimes, but that's what I've been more patient lately, rolling stuff earlier, rolling stuff out, taking different positions, and it's just, I like it a lot better than like, all right, I got all my trades expiring tomorrow. Fingers crossed we don't drop XYZ amount or go up this certain amount based on what your position is. And
yeah,
that's kind of where my head's been lately. I'm more patient. I don't mind pushing stuff out, even if it's a month, 3 weeks, 2 weeks, just to, give things time to work out. And then if it doesn't, it's looking at, all right, what do we do from here? And it's really interesting, but I do appreciate you coming back on, man. I think we should wrap it up here and
sounds good.
Get round 2 or video 2 going on this.
Excellent.
So I'm excited to have you back though. I know you had been a little busy, and it'll be fun. Get some more trades out to the Discord and see how things are going. So cool. I appreciate
it. All right, man. Thank you.
Oh yeah, anytime, man. We will see all you guys in the next one. Do not forget to leave a like, a subscribe, a comment below. If you guys want to join the Discord, hang out with the traders and the trades, the link is in the description, so you guys can check that out below. We will see you guys in the next one.